Hello everyone and welcome to another episode of Industry Insider. Today I'm going to be going over the Q2 2021 results of Twitter. I'm going to be talking about not only what it means for Twitter, but what does it mean for other companies in the social media industry. Moving to the first slide, and we're just going to see the earnings right now. And year over year, Twitter is really killing it. But I want to emphasize something. So even though they grew almost double from 683 million all the way to 1.19 billion, you have to remember Q2 2020 was a Q without live events. And when you don't have any live events, then it's very hard to see advertising on Twitter really ramping up. And you can see that they moved from a operational loss last year in the quarter to a operational revenue of $30 million. So like really big jump here. And you're seeing that daily active users that were monetized is up from the second quarter of 2020, which means that they're managing to gain more international users, which is very interesting. So here's from the letter. Q2 was a strong quarter with total revenue of 1.19 billion, up 74% year over year, reflecting better than expected performance across all major products and geographies. And one of the things that I want to also emphasize is that the average monetizable users that reached 206 million is something that Wall Street wasn't really expecting. You would probably expect that people would probably maybe tweet less or use Twitter less after, economies open up. But I think that this is something that surprised everybody, and probably Twitter is actually better when we're outside, so it's something to take into consideration. Now, up until recently, it was easier for me as an advertiser to advertise on Twitter, and it is becoming more difficult as time goes by, and it just kind of shows that there is a price surge happening on Twitter inventory, and Twitter inventory is becoming more and more expensive. One thing that I would also like to note is that when I am on the Twitter feed, I see that the Twitter ads are becoming a bit bigger, taking a bit more real estate, showing that Twitter is taking advertising more seriously than ever. Now, a bunch of information here about tip jar and ticketed spaces and super follows. So I'm not going to get into all of these things, but Twitter is experimenting with a lot of different products. They were experimenting with a Clubhouse competitor called Spaces. So that Twitter is really trying to experiment with all kinds of ways to get people to do more than just tweet. We continue to improve our brand and direct response ad products with updated formats. So a bit of what I was talking about, promoted tweets take more real estate. They're probably going to have a bigger impact. They have a bigger impact. They'll probably convert more. And if they convert more, people will pay more to advertise on Twitter. So that's kind of how it goes. We're providing better ways for anyone with commercial intent to reach and monetize their audience on Twitter, which is a foundational part of our long-term SMB strategy. Now, I like this because Facebook made its name with SMBs by giving them the power to compete with the big names. And Twitter, I'm not so sure if you can associate Twitter as a company that really empowers SMBs yet. If they can really give power to small, medium businesses to convert the right users in the right time with the right ad format, this will be a game changer for the company, which has been struggling to find a sustainable revenue growth over time. Just to kind of remind, last year, Facebook's Q2 was very different than Twitter's Q2 of 2020. So just as a comparison. Video continues to be an important focus area to better meet the needs of our advertisers who rely heavy on video completion. We also introduced a new 15-second view bidding unit. They're talking about how video is becoming a bigger advertising format on Twitter. So that's interesting. Looking at the revenue, how it's broken down, you can see that majority of the revenue is from the US, even though the majority of the users are not. So that's something interesting to note. And you can see same kind of ratio between revenue, US international from Q2 2020 and Q2 2021. So you can see their R&D cost went up significantly, almost 50% up, which is important to see what are the intentions inside Twitter. General administrative, way down. So that's very interesting. And sales and marketing is up. So that they're serious about creating this into a proper advertising platform. What else do we have here? Balance sheet. So generating more cash, obviously a good quarter, more free cash flow for the company. I can't say that this is like a company with an amazing balance sheet, but pretty decent taking into account the tough year it had in 2020. Outlook, given our execution confidence in our strategy as we enter the second half, we're updating our outlook for expense growth and revenue. We now expect headcount along with total cost and expenses to grow 30% or more for the full year of 2021. So they're expecting for Q3 1.22 to 1.3 billion, and they're expecting, approximately 600 million. Capital expenditure expected between 900 and 950. So nothing out of the ordinary here, like that's screaming out to me. Just looking like that Q3 is not going to be a lot of growth from Q2. I actually expected maybe a bit more from the Olympics, but we'll take what we can get. By the way, besides owning Twitter through the QQQs, I do not own any more Twitter stock. I used to own some of the stock in the past. I am very heavily allocating into Facebook. So you can see how much cash and cash equivalents they have on hand right now in terms of accounts receivable, prepaid expenses. All in all, it looks like their reports are looking bright, and there's some smiles probably in the Twitter hallways. So let's put this to the side and let's talk about what this means for Facebook. So Facebook is currently showing a lot of strength in terms of their advertising business, and Q1 was an amazing Q for them. Now, besides Q1 being an amazing Q, they started also kind of going into the physical world with the Oculus Rift. And the way I see this is that Facebook has invested heavily in one of the probably most futuristic ways of engaging with other people, and that's VR and AR. And that's a place where Twitter has completely, is left out. Twitter is left out of that realm. And if Facebook can say something about the sales of the Oculus, if they can start showing some metrics of engagement on the Oculus, and they're good engagement, they're going to have the same reaction that people had to Twitter results and more. So I talked about this in a couple of videos in the past, that I think Facebook can reach $400. And what Twitter just showed is that there's no limit to how much people will want to use social media. And if people are leaving their houses after lockdowns are lifted, social media activity might be amplified, which is very interesting to see. One of the things that I see a lot going on in discussions on CNBC is the kind of competition on our attention. And I don't think there's a competition between Facebook, Twitter, Snapchat, Pinterest, TikTok with each other as much as there's a competition with Netflix. You're seeing that Netflix had an earnings results come out, and very disappointing. And I think that once people were able to leave the house, it's actually the big screen content that is the content that got hurt the most. And the social media apps all just got more time and more eyeballs and more revenue from advertising. So that's kind of the revelation I had from the Twitter results. And maybe I'm wrong. We're gonna have to wait for data to come out on this. If there is any kind of data and you know about it, let me know in the comment section. If you enjoyed this video of Industry Insider on Twitter's quarterly results, hit that like button. And if you want to see more videos like this and you're new to the channel, then it's time to subscribe and hit that bell for notifications so you can get notified when a video like this comes out. Thanks for watching. See you next time.